landing without crashing it. That is what a soft landing is. What do you think? That's the question. I don't think so. The Fed seems determined to kill the economy. Am I out of line saying that? The question is, but why? Why would they do this? One analyst that was just quoted by Fox Business, I look at both sides, liberal pundits, neutral pundits, conservative pundits, they're warning that times are going to get tougher from here. Sure seems like that. With the new rate projections that we talked about, the Fed is engineering a hard landing. A soft landing is almost out of the question. That's Chief Global Strategist of Principal Global Investors. Powell's admission that there will be below trend growth for a period should be translated as central banks speak for recession, which we're already in, ladies and gentlemen. Times are going to get tougher from here. Growth is slowing as the Fed pushes borrowing costs higher. The Fed said Wednesday it expects the economy to grow just 0.2% this year and 1.2% in 2023, below its June estimate of 1.7% for both years. That's according to officials, medium estimate. Even Jerome Powell, Mr. Transitory, can't say the word recession, doesn't say Americans are going to lose their jobs, but is admitting an increase in unemployment is likely because of what the Fed is doing. Millions of jobs will be lost. Mr. Powell says, I think there's a very likelihood we will have a period of much lower growth, and it could give rise to an increase in employment. Perfectly well said. Very poetic. Will that mean a recession? No one knows whether the process will lead to a recession or how significant a recession it will be, Powell said. I don't know the odds, sir. Actually, respectfully, we are in a recession right now. And Powell and his minions have just made things a whole lot worse. However, as we go on, there is opportunity during this madness. Even Democratic Senator Elizabeth Warren had a moment of clarity. I mean, she stated, Senator Elizabeth Warren, Chair Powell just announced another extreme interest rate hike while forecasting higher unemployment. I've been warning that Chair Powell Fed would throw millions of Americans out of work, and I fear he's already on the path to doing so. This is one of the rare occasions where, Senator Elizabeth Warren is right over the target, in my opinion. They know exactly what they are doing. The experts that run the Federal Reserve, they have more economists in the Federal Reserve than anywhere. Trust me. Know that if they dramatically hike interest rates, it will cause countless American workers to lose their jobs, and it will absolutely crush, to an extent, sectors of the housing market. And even though those two things are already starting to happen, they just announced another massive rate hike. If there was a school for central bankers, ladies and gentlemen, one of the very first things that they would teach you is that you should never, ever raise rates as an economy is plunging into a recession. We're already in a recession. We all know that. Every Fed official knows what has happened in the past when rates have been hiked at the beginning of an economic slowdown. We're in a recession now. Once again, I'm going to say it. We have precedent, but they're doing it anyway. And to call this an economic malpractice would be an understatement, in my opinion. And the American people should be deeply alarmed about what they are doing right now. But they're too busy watching football. So after everything that has already happened, it is hard to believe that the Fed officials would continue to be so reckless. On Wednesday, it was announced, and we talked about this, other people have talked about this, the rates would be raised by another 75 basis points. 75 basis points, ladies and gentlemen. The Federal Reserve on Wednesday raised its benchmark interest rate by 75 basis points for the third straight month as it struggles to bring in the scorching hot inflation under control, a move that threatens to slow the U.S. economic growth and exacerbate financial pain for millions of households and businesses. I would argue that millions of households and businesses, ladies and gentlemen, have been struggling already for months. The 0.75% hike, we know they did it in June, July, and now September. That's the most aggressive series of increases since 1994. underscoring just how serious Fed officials are about tackling the inflation crisis after a string of alarming economic reports. Policymakers voted unanimously to approve the latest supersized interest rate hike. It was a unanimous vote, ladies and gentlemen. There wasn't even one, not one dissenting vote. Have they gone completely mad? Completely mad. You know, Wall Street certainly did not like this decision. I did not like this decision. Before the market crashed to 522, I moved some money out of it. The Dow plunged hundreds of points immediately after it was announced. The Dow Jones Industrial Average slid 522.45 points. That's roughly 1.7% to close at 30,188.78. The S&P 500 shed 1.71 to 3,789.93, and the Nasdaq Composite slumped 1.79% to 11,220.19. Fantastic. The S&P ended Wednesday's session down more than 10% in the past 2 months and 21% off the 52-week high. Even before the rate decision, stocks were, pricing in an aggressive tightening campaign by the Fed that could tip the economy into a recession. It's in a recession. People's 401ks are dumped. The stock market's in a bear market right now, folks. For ages, the Fed coddled the financial markets, but now it is almost as if they don't give a shit anymore. A little emotional. So personally, I'm far more concerned about what is happening to ordinary Americans. I know a lot of people don't give a shit about ordinary Americans in the months ahead. Look what's happening in Europe. It's going to be a rough winter. Even Jerome Powell is admitting that an increase in unemployment is likely because of what the Fed is doing. Yeah, it's only 350 million poor people. The population's too high anyway, right? Doesn't matter. It's just a bunch of poor people. In fact, things are already so bad that even Facebook is trimming their numbers. Facebook. You had to find this in the Wall Street Journal. As growth stalls and competition intensifies, Facebook parent Meta has begun quietly cutting staff by reorganizing departments. I've been part of that. While giving reorganized employees a narrow window to apply for other roles within the company. Ooh, you know what they're doing there? It's a narrow window, and they're not going to get those jobs. And that's according to the Wall Street Journal, citing current and former managers familiar with the matter. Some whistleblowers came out. So what they do, ladies and gentlemen, is by shuffling people around, the company achieves staffing cuts while forestalling the massive issuance of pink slips. So why would the Fed choose to raise rates when layoffs are already beginning to spike, and they were spiking months ago, folks? You just got to know where to look. Higher rates are also having an impact on the housing market. But let's look at both sides of this. So on one side, you're seeing this, it's devastating. I will tell you to think between the lines on this, and we'll just look at a few examples. So what are statistics? When are statistics not really statistics? Mark Twain is famously attributed with the quote, "There are three kinds of lies: lies, damned lies, and statistics." Statistics can be manipulated, right? This week, we learned that sales of existing homes have now fallen for 7 months in a row. Home sales declined for the 7th month in a row in August. Interesting data in August. Stick with me here. As higher mortgage rates and stubbornly high prices push prospective buyers out of the market. So sales of existing homes, which include single-family homes, townhomes, condominiums, and co-ops, were down roughly 19.9% from a year ago and down 0.4% from July. And that's according to reports of the National Association of Realtors. I think someone, a broker, someone in the real estate sector should start putting Jerome Powell did this stickers on for sale signs all over the nation. So remember who did this, because this did not have to happen. Now the housing market is already at a standstill in select markets, and the Fed just keeps making things worse. Some of this is true. I was in Lake Tahoe talking to one of the top guns, cash offers across the board from people from San Francisco. $11 million closed. The prolonged downturn in confidence shows the housing market has been in a tailspin for the whole of the year. And that's according to Pantheon macroeconomic chief economist Ian Shishamanan. I don't know. I got dyslexia, but a photographic memory. and I got Asperger's. So activity in the mortgage applications has been lagging early September. Some of the numbers are grim, but, you know, he's optimistic a little bit, but they're grim. He said that on Monday. So in short, ladies and gentlemen, my perspective, the housing market has pain points, which is already hammering. I've talked about this to home builders, and will soon depress housing-related retail sales. So this is key, though, with these statistics. When is a statistic so misleading that it becomes irrelevant when placed in context? Let's look at one thing again. Yahoo Finance and Redfin both breathless report that home sales plunge, citing the unit count. They looked at the unit count declines of 25 to 30% in most markets. Most markets. Well, that sounds bad, but what does it really mean? Then they put in a graph, you know, these wonderful graphs. It must be true. That looks scary. Look at this plunge, blah, blah, blah. It is true. Unit sales, or the number of homes sold, have declined, but declined compared to what? Right? Look at the 2-year trend. For example, while sales went down in August, I have some interesting numbers in August. This is almost after 2 years of record sales in unit count, which may mean that many home buyers that would have bought last month have already purchased over the past years, few years of the, you know, once in my lifetime, you know, event called COVID or the pandemic. So I think the term plunge is used to make sellers fearful that prices have plunged, which has not happened in the market overall. It hasn't. It hasn't. It's not all doom and gloom with all this clickbait BS, people. I don't do that crap. You know, check this out from the Commerce Department. This is from the Commerce Department. Americans went on a home buying spree, especially the affluent, in August, while mortgage rates temporarily dipped. Data from the Commerce Department indicated Tuesday. New home sales jumped 28.8% to a seasonally adjusted annual rate of $685,000 in August. So remember what I told you earlier in August? That's from the Commerce Department. And I travel, and I'm seeing the same thing in select markets. Keep in mind, however, that prices have risen dramatically, ladies and gentlemen. I mean, Jesus. In fact, on average, 44% over the past 2 years. It goes down 20%. Who cares? You're going to have that forever home and park your money. You're going to make money. The result is that the lower units sold result in what would have been record sales volume prior to the pandemic. This is clear when you look at all the continued increase in sales price per square foot, which has also increased about 50% during that period. All that said, let's not overlook the mortgage rate jumped over, 0.50% this week, and most buyers don't even know it. Yes, times are definitely going to get tougher from here. Now, I'm not just talking about housing. In fact, we are eventually headed for a meltdown of epic proportions in some sectors, in certain situations. So, but instead of, working to prevent a historic crisis, the Federal Reserve is actually encouraging one. Something does stink what the Fed is doing. However, in these interesting times, it's an opportunity to capitalize, ladies and gentlemen. Just like the greatest wealth transfer occurred during COVID, more millionaires will be created in this downturn. Okay, this is an opportunity. The Fed sent another clear message in September that its fight against inflation is not finished. They sent that message because they're desperate now and they don't know what to do. But this is an opportunity. It's a bear market right now in the stock market. My brother's a genius at this stuff. He moved his money around. And other people that I'm talking to. And BlackRock has $50 billion set aside to buy foreclosed homes across the country. I can't emphasize this enough. I don't believe in this. I believe homeownership and property rights is what makes America unique compared to other countries. And there are people that want to take that away. I think it's disgusting and shameful. There are people on a higher level than me that want to create these institutional investors want to buy up all the homes and create a nation of renters and take the American dream away from people. I don't believe in that. I don't believe in that one bit. And that is going around right now, and defaults are up across the country. Investors and smaller investors I talk to are seeing that as an opportunity, and that's great. But the long run of this could be devastating. not everyone deserves to own a home. You know, what happened in 2008, people weren't qualified to do it, 100% financing, what have you. But, I understand asset managers want to put their portfolios into real estate, but it's out of control. And there's things done by design. And this needs to be curtailed and limited. That's what's going on right now. So BlackRock's got money set aside to buy homes. Prices are still going to be high. There's only so much land, ladies and gentlemen. Real estate's a safer asset than the stock market. A lot of people make dividends off stocks. My brother's a genius at that. But real estate's still the safest bet, safest play. And I'm seeing the power brokers, and I was talking to people in Lake Tahoe, one of the biggest commercial guys. He represented the guy that built the Beverly Center in LA. This guy's a baller. And it was an interesting 4-hour conversation with him. So I'm bullish on the market as far as real estate, even in a down market. Like I said, some people are going to come out like bandits, but I'm very concerned about the middle class. It's being howled out, like I talked about in my other video, and I think it's shameful. And I'll tell you right now, you need to pray right now and take care of your family and keep pushing, keep working hard every day, and be optimistic. But be aware of these things that are going on. There's opportunities if you're a real estate guru right now. You just got to know where to find them. Take care.